Welcome to Fundoo Money, your 24/7 buddy on all matters related to personal finance. In this particular web series, we are discussing various things people need to keep in mind while investing in stocks. That's right, stocks. And these are not tips to make you get rich quickly. These are this particular series is aimed at making you into a smart investor. Now, a lot of people hear a lot of things about a term called buyback, and they keep wondering what it is all about. Now, in this particular segment, we'll be discussing what a common investor needs to keep in mind when a buyback announcement is made. That follows shortly. Well, as I was saying, buyback is an oft-used term that keeps coming on and off in various stock market news, discussions, etc. Now, what is it all about, and what does an investor need to keep in mind? To help us figure this thing out, we have stock market expert Mohit Satyanan. Hi, Mohit.
Hi again.
Mohit, the word buyback is basic, isn't it all about buying something back? And so I presume that when people are talking about buyback of shares, it's the company's buying back the shares which it had given out in the first place. But is it just that, or there's something more to it? And are there opportunities out there for investors?
Yeah, so we've largely seen two kinds of buybacks. The idea of a buyback, typically speaking, has been that a company now is not growing so rapidly. And or that it's generating a huge amount of cash, and therefore it feels that the best use that it can make of all this money that is lying in its coffers is not to expand its activities, but to reduce the floating stock out there so that the return, the earnings per share goes up. Okay, and so the investor has an option of saying, you know what, at this price, I think the share is fairly well priced. And since the company is not going to be growing so rapidly, I might as well exit. But there's another kind of buyback. And this one is a very strange kind of buyback. And we've seen this animal in the Indian markets recently, which seems to be a company is not doing well.
Okay.
And in fact, it has fairly substantial borrowings out of that. And the share price is falling. And then the management announces a buyback.
Okay.
And it seems to be the fond hope that by this buyback, the share price will stop dropping or will start rising. This doesn't work. It's not going to work, because if the company had so much money that it could keep buying its stock in order to raise the price, it wouldn't have the borrowings out there in the first place, and the stock wouldn't be dropping in the second place. And secondly, it's a bit of an illusion, because the amount of money that they dedicate to that buyback is so small that it can't materially affect the impact of the price. But finally, it comes to the same thing. Do you think that a share is well priced at a particular price or not? If you think it isn't, the buyback theoretically gives you an opportunity to get out.
So one thing comes out very clearly. I mean, there's no set formula for figuring out what buybacks are. At the end, it comes back to good old earnings.
Absolutely.
I mean, and how well a company is performing, how well a company is utilizing the capital it has raised. So these are the two critical things. It's almost like the way your health is. How well are your vital indicators? What is the story they're telling? Other things are actually linked with it. I sincerely hope you liked what Mohit had to offer. And if you think we have missed out something, or there's a different perspective, go right down to the comment section and leave behind your comments. If there's an idea for a video, or an audio, we would love to create that for you. And of course, we'd love to have you subscribe to our channel, and please stay connected with us on all leading social media platforms.